what is best for you. All right, let me know if that's working. Okay, so as I was saying, back to Siri. Let's look at the last 30 days. Okay, 30 days ago, same thing. Opened up at 416. The 30-day high was 425. Just kept dropping. Okay, dropping and dropping and dropping. Okay, at this moment in time, we're at 349. Where's it going to go? Don't know. But if I was going to buy, I can see it. Thanks. All right, Al, no problem. All right. If I was going to buy it tomorrow morning, I'm sorry, Monday morning. If I'm going to buy it Monday morning, I'm going to pay 352. The 350s are going at 1 cent at this moment in time. I'm going to take another look at that. So I'm actually going to write Siri down for consideration next week. But I'm waiting for the bottom. All right, so Siri is on the list. It's not circled because it's not a definite. It's just, in that little category where I'm going to look at it. All right, so that was Siri. We're going to pick up where we left off last night with Ford. Okay. Oh, there's only 100 people there. Come on, guys, you got to share. Share the love so people know that we're here. All right. Take a look at Ford again. Ford. All right. A year ago, Ford opened up at 1241. Okay, got a triple high at 1538. That was end of June, beginning of July. Okay, from there she dropped to a bottom of 964. 964 was the bottom of the year for Ford. The last 90 days. Okay, 90 days ago today, Ford was at 1185. She dropped to the 90-day bottom, and that was 1083. Now, 1083, even high school kids can afford that. Seriously. All right, so here's your bottom for the 90-day period. Your top was Thursday. All right, so what happened on Thursday? Thursday, we topped off at 1395. Now, 1395, I'd be looking at the 14s. And the 14s right now are only going for 3 cents. Really not worth it. So as much as I like Ford, I don't see it as being a possibility for this week because there's so much space here between the 90-day bottom and the 90-day top. Okay, let's look at the last 30 days and see what kind of space we got in there. Okay, even here, okay, the 30-day bottom is right there on the 18th. Okay, from here, 12 up to 14. Granted, it's only $2, but $2 on a $12 stock, that's a 12% increase. Okay, yeah, so I'm looking at that as not a possibility this time around. Now, seasonality for Ford, what does Ford do this time of year? Basically sideways. A little bit of upturn from where it is at the moment. You see where it is at the moment? Just a little bit to the upside. Okay, that's Ford. I'm going to say no to Ford only because the numbers just don't work. ARR is next. ARR. 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 That's a monthly, so that's going to be a no. AFRM. AFRM. More residential. Okay. 33s. Interesting. I like this one. Okay, we ready to take a look at this one? AFRM. A year ago today, we were at 1039, bottomed out the beginning of May, right around 861. Okay, all the way up to the high of the year at 5248, and that was towards the end of December. Okay, end of December. Okay, last 90 days. 90 days ago today, we opened up at 4158. Okay, our 90-day top was 49.99. Our 90-day bottom was Friday and that was 31.73. Here's the thing. Take a look at this. Let's take a look at the 30 days. I'm going to show you something really neat. I don't know how neat it is, but I think it's pretty cool. 30 days ago, we opened up at 37. A couple of days later, we're at the high at 40.32. Got your profit taken, brought you down to 32.45. Jumps up again to go to, what was that, 39.38. Sideways for a little bit, and then 4 days to the downside. Gap down. The gap is not quite filled yet. Okay, so 4 days to the downside. 1, 2, 3, 4. One up day. If this thing opens up higher on Monday, I'm jumping in because I like 2 days to the upside after a pullback, especially a 4-day pullback. Julie, 31.50. 31.50. Well, let's take a look at what the numbers look like. So if I could buy it first thing Monday, I'm paying 33.51. The 33.50s are going for $1.05. The 32.50s, what she's saying, 151. Let's take a look and see what the numbers look like. Oh, she likes it, 31.50. Okay. Let's take a look. Okay, get my calculator. Okay, at the money right now, 33.50. Let's take a look at that one. Okay, 33.50, and we sell. Okay, we're losing 1 penny, so that would be 104. 104 divided by 33.50, and that would equal 3.1%. It doesn't pay a dividend. Then what the heck are we looking at it for? Seriously. Let's go take a gander. AFRM. AFRM. That's kind of interesting. It's like, why are we looking at it? It doesn't pay a dividend. All right. I don't know who came up with this one. Somebody threw this out last night. Historical prices. Dividends only. Yeah, they have no dividends. What about Dogecoin? They don't pay any dividends either. Up to 34.50. All right, Julie, I'm not going to dissuade you from doing it because the premiums are nice. You know, they have nice premiums, but they don't have a dividend. Okay, so what is your fallback plan if the stock goes down? Berkshire makes $1 billion a year in dividend income. How jealous are you? Well, I say great. Should I buy? I can't tell you that, T. Really can't. Because number one, I only do stocks that have dividends because I like to have some kind of reassurance. If the stock goes down, I would be able to at least collect a dividend that increases every year. Now, Affirm may be a great stock, and it is in a perfect movement right now. I mean, the chart, you get your 30-day high over here, runs up the 30-day high, you got your profit taking. A bottom here, shoots on up, more profit taking, goes up, more profit taking. Now she's down here after 4 days and a gap down. Okay, if this thing opens up higher on Monday, it's a perfect signal. Not it's perfect, but it's a good signal to jump in. All right, what's your portfolio average yield? Over 50%. My average yield, Miss Real Pranks. I don't know if that's Mr. Real Pranks or Mrs. Real Pranks or Miss Real Pranks or whatever Real Pranks, but whatever. Yeah, my average is over 50% per year. Now, as much as I like that, much as I like the numbers, it doesn't have dividends, so it'd be not on my list. Okay, I'm glad you appreciate that. All right, so we need to get some more people here. So we got to like, share, comment, do that, all that kind of nice, neat stuff, so we can get more people over here. Caterpillar, CAT. Gotta love Caterpillar. Now, Caterpillar is on my list, but that's going to be a no. Why is it going to be a no? Well, look at this. Okay. A few months ago, nothing but straight up. Okay, nothing but straight up. And I don't do stocks over 300 bucks. Okay, so as much as I like Caterpillar, look at this. Okay, much as I like Caterpillar, look at it. Okay, stocks do two things. They go up, they go down. And there's got to be a balance somewhere. So at some point, someone's going to say, I want my profits. And they're going to take their profits, and it's going to be gone. Okay, so I'm going to say no to Caterpillar at this moment in time. The 380. Ooh, look at this. 379.59. The 380 is going for 490. That's over 1%. It is. You're getting your 1%. The dividend's coming up, but look at profit taking is going to be there somewhere. I don't know when. I don't know where. Now, what does Caterpillar usually do this time of year? Caterpillar usually goes just sideways. Okay, no big movement at all in Caterpillar. Right? James is the dividend kingmaker on TikTok. I have no idea what the dividend kingmaker is. Don't know. Who is the dividend kingmaker, AFRM? Yeah, that's a bummer. Colgate Palmolive, CL, Rainmaker. He's playing. Oh, he's paying you a compliment. Well, alrighty then. I thought he was talking. He was asking me if I knew somebody on that name by that name. All right. Thanks, Al. Colgate Palmolive, CL. 87, 88. That's going to be a no. The numbers just don't look right. Oh, whoa, look at that. Wow. Look at that. It almost looks like Caterpillar right to get here because they have 4 days to the downside towards the end. I assume AXP, MAV are in the same boat as Caterpillar. Well, let's take a look at those. Let me write them down real quick before they disappear. American Express, MasterCard, and Visa. Well, imagine that. Okay, so Colgate-Palmolive now. HUM. HUM is next. We're picking up from the list from last night. HUM. 313. Okay. That's kind of interesting. Let's take a look at Humana for a second. Okay, because the chart looks interesting. The numbers work. So let's take a look. A year ago today, 519. Now I usually stay away from stocks over 300 bucks. But let's take a look because some people might be interested. We got a 5 topper. Look at that. 5 times it hit that top. There's your resistance right there. That's like a clear-cut signal. Like, that ain't going any higher. Let's turn you a little bit. There we go. All right. Let's turn this one a little bit. There you go. All right. Oh, and turn this one. What did I move or something? Because they all moved. Okay. We gapped down in June. Gapped down in June, sideways for a bit. Gapped up in August. Okay, all over the place. Look at that. Now, since January, the last 90 days, 90 days ago today, we're at the 90-day high. Okay, and that was 464. 1 gap down, 2 gap downs, 3 gap downs. 3, 1, 2, 3. 3 gap downs, and then we get this trading range right here. Okay, that trading range looks like 350. Go sideways for a little bit. Okay, now we bottom out. Look at the last 30 days. Right there. 30 days ago today, we opened up at 337.41. Okay, go sideways for a bit. Got that 30-day high at 354, and that was the 22nd of March. From there, we get to the 1st of April. Okay, April Fool's Day. Very next day, gap down real big. Okay, now we lower down to 299. So imagine that. You're at 351 day. Okay, you're at 351 day right here on April 1st. Okay, April 2nd, you bottomed out at 299. That's a $50 drop. A $50 drop overnight. Okay, and then 3 days to the upside. 3 days to the upside is the perfect time to jump in. Now, what does Humana do about this time of year? Humana at this time of year. Nice. Look at that movement to the upside. You can't mistake that. Okay, that's moving to the upside. It is. Now, I like it when the seasonality is really prominent, which this one is. A lot of times seasonality is just flat, but this one, that's prominent to the upside. All right, so let's go back to the 30 days. Where are we? Right there. All right. Are you more of a day trader? Well, I'm not really a day trader. Well, you could say that because I trade on Monday. I like to buy on Monday and sell on Friday. Okay, but I'm not, buying or selling on Tuesday, Wednesday, and Thursday. So I'm not quite sure if that actually consists of being a day trader. I'm not sure. All the healthcare got hit because Medicare raise isn't perceived to be enough of an increase. Well, of course not. They need more money to the government pockets. I mean, really. Okay, so Monday morning, we can look at 313.59. Okay, the 315s are going for 340 a share if you like Humana. So let's take a look at the numbers. All right, Judy, we'll put Apple on the list. Apple is on the list, AAPL. Just to let you know, Judy, I do have like 4 different positions in Apple. Price target 391. Ooh, nice. Price target 391. Okay, so anyway, we're looking at 313.59. Okay, I got that, Julie. Thank you. That's awesome. What are we looking at? 315? Okay, the 315s are going for 340. I'd like to see what the 312s look like. Okay, only because they're in the money. They're in the money by about $1. Okay, boss, what do you think of Solana? I need the actual ticker symbol. How do you feel about Palantir? Okay, we looked at Palantir last night, and it was a no last night, so I'm not quite sure why it might be a tonight. Not for nothing, James. That AFRM really does have a fat premium despite no dividend. Yes, Secretariat, I noticed that same thing. Look at ETV. Oops. ETV. All right. Hello, I'm Mr. Ed. Ed TV. Oak, OAK. Somehow I feel OAK is a monthly. I think I've looked at that before. All right. So Humana. We're looking at Humana. Let's take a look at the numbers. Mara. PLTR. Yeah. All right. Let's take a look at PLTR. We looked at PLTR last night. PLTR and Mara. MARA. All right. It's written down. We'll take a look at it. OZK. Ozark. OZK. All right. So let's take a look at the numbers for the 312.5. So I'm losing $1, $1.09. So $1 would be 370, 361. So 361. Whoops. Yeah, I was right. 361 divided by the purchase price, 313.50. Well, let's go back here again. 313.50. That equals 1.1%. ONDO. What the heck is that? Ondo. What's a good dividend stock to buy and hold ever? Basically, I really can't give you an answer to that one. IWM is a buy per Tommy Lee. Okay, now I know a bunch of different Tommy Lees. Believe it or not, I know 3 Tommy Lees. So I don't know which one. D-O. Ondo. O-N-D-O. Okay. Ondo. O-N-D-O. We'll take a look at it. PLTR has no dividends. That's probably why we don't do Palantir. PFE. Pfizer. PFE. All right, we'll take a look at PFE. We're down to 83 people. This is not good. I know many ETVs. DRI. DRI. All right, let's take a look at the next one. Okay, so as much as Humana looks interesting, the 313s, okay, that's right, the 312.5s are going for 1.1%. But I don't like stocks over 300 bucks. Too far of a drop. All right, the next one on the list is going to be Alibaba. Now I do have Alibaba in a different count. Just gotta let you guys know that. BA 71.77. So the 72s. Ooh. Okay. DRI is a monthly. Thanks, Jen. DRI. Alibaba a year ago, 101.21. Okay, the high of the year was 103.32, and that was the beginning of April of last year. Okay, the bottom of the year was January 22nd at 66.79. Okay, last 30 days. There we go. 30 days ago today, we opened up at 74.20, gap down, 1, 2, 3 gaps up, gap down. 30-day high is 77.45. Okay, she gaps down, keeps going, gaps down again. We got a 30-day bottom on the 27th of March. Okay, 2 gaps up to a 30-day interesting number. Okay, 30-day highs over here, 30-day bottoms here. She gaps up twice. You got one gap that filled, second gap that filled, and we're right here. I would look for a turnaround to go to the upside. Now, I already do have Alibaba somewhere else. Okay, so the number for Alibaba right now, 71.80, the 72 is going for 97 cents. That's over 1%, and that's what we're looking for. Okay, clear that. 97 cents. Divided by the purchase price, 71.80, 71.80, and that could be 1.35. But interesting thing, hey, Michael, how's it going? Is this card counting? Okay, Ram, this is exactly what it is, card counting with our stock symbols. Okay. Actually, now it's less than 1% a week. Okay. So, Alibaba, first thing Monday morning, 71.80. The 72s are going for 97 cents, but here's the thing. That's 1.35%. Okay, great. If it does go above 72, you're going to collect another 20 cents on top of that. Can you show a list so far quickly? Julie, how are you? Here's the list right here, from here down to there. Okay, it's not that big. Well, actually, yeah, it's more right there, from here to there. And Julie, we already looked at Ford today. Okay, ARCC. Okay, so I do like Alibaba, Boeing, BA. BA for Boeing. All right. That being said, look at the next one. Erie. Why is he keep throwing Erie out there? ERIE. Okay, so next one on the list is ARC. ARCC. ARCC. Okay. ARCC. Aries Capital. Monthly. No. ME. All right, next one is AM. Isn't AMD a month? AMD. Advanced Micro Divisions. Okay, interesting. The 170s, 170s. Ooh, let's take a look at AMD. Had an obese premium, but no dividend. Okay, Mara is no. Erie is a monthly. Thanks, Jen. No to Erie and no to, what was the other one? Mara. No to Mara. MARA is a no. Okay. So let's look at AMD, Advanced Micro Divisions. Okay. Leah, I don't know if someone is impersonating you or not. You're a liar. Oh, well, Leah, I appreciate you looking out for me, but just to let you know, Miss Leah, there are 12 12 people pretending to be me. So I always tell people, if you ever get something in the mail or DM or whatever from me, your best bet is just DM me with your phone number and I'll actually give you a call. Someone said they would give me investment advice. Yeah, that wasn't me. Now, Leah, I'm good with names and numbers. I do not recognize your name. Okay, so if you come here to my live event, which I do every night at 9 o'clock, all right, and I don't recognize your name, that means I've never interacted with you before. Okay, I'm really good with names. You can ask a lot of people here that come in here for a long time. If you really want to talk to me, if you really want some advice, DM me your phone number. I will call you personally. But there are 12 other people pretending to be me. So that's totally up to you. Advanced micro devices. Yeah, Judy, we're looking at that right now. AMD, Advanced Micro Devices. A year ago today, we were at 92.58. Okay, we bottomed out in the beginning of May of last year at 80.71. Go up a little bit, go sideways. It just goes up a little bit, went sideways, and then she shoots up. Look at that shoot up from here, from November to March. That's nice movement. Let's take a look at the last 90 days. Last 90 days. Here we go. 90 days ago today. That's 3 months ago. 3 months ago. 90 days ago, we're at the 90-day bottom, and that was at 140.15. Okay, 140.15 90 days ago. Now she jumps up, goes sideways for a little bit, and she shoots up to the high of the year at 227.30. Okay, that's the high of the year right there. Big pullback, sideways a little bit, and then drops. This is a good opportunity to jump in because she's coming off that 30-day high. So let's take a look at the actual numbers. 30 days ago today, we were at 210.43. AMD doesn't pay a dividend. Then why are we looking at it? People, do not say, please. I have all these stocks to look at. Okay, don't suggest stocks that don't have dividends. Dividends and weekly options. And we just wasted all that time looking at AMD, and it doesn't have dividends. So that's off the list. BST. Thanks for that, Randy. Okay, BST. BST. BlackRock Silence Technology. They don't have dividends either. They don't even have options. BST is a no. All right. Somebody wanted to know the credit cards. You missed one. Okay. You blurted out American Express, MasterCard, and Visa. You forgot Discover, DSC. So let's check them out. AXP. Alrighty. Let's take a look at American Express. A year ago today, American Express opened up at 159.92. The bottom of the year was a double bottom at 140.52, and that was right around the end of October. Look at the run up from October up to there. That's a nice run up if you ask me. Let's take a look. Look at that. Okay? From October to the high. But we want to look at the last 30 days because we topped off here and we had profit taken. There's an opportunity right there, and I want to go take a good look at it. All right, last 90 days. Last 90 days, we opened up at 186.82. That was 90 days ago. The 90-day bottom on the 18th of January was 177.81. All right, last 30 days. All right, 30 days ago today, we got a double bottom here. Check this out. 30 days ago, and looks like on the 17th. Okay, 30 days ago, she was up, sideways, dropped down. Okay, and then she shoots up. That's nice. Pull back, sideways, up, and then back down again. Okay, you have this big, huge drop here. You have up here. I have a suspicion it's going to go up again Monday. But I want to see what it opens up at first. But let's take a look at the numbers. 30 days ago, we opened up at 217. Sound waves. Hope you did well last week. All right. 30-day top was 231.69. No, wait, all right. Yeah, 231.69 was the high for the 30-day period. See right there? Okay, then she pulls back. Okay, and then we pulled back. Okay, went pulled back, jump back up again, pulled back, jump back up again. Now, sir, if you buy dividend stock on a day before the EX date and sell after, will I still get money? Well, Mr. Jim, you're talking about dividend capturing from basically from that sentence you just asked. Okay. Isn't AMD a Buffett-owned stock? I don't know. It could very well be, but it doesn't pay dividend. We can take a look. I'll take a look at it again in a second. I'm going to answer Jim's question. Holy cow. 54? That's it? Should we drop? Should we like end now and just like reboot and see if we can get more? Holy cow. But Jim, this is for you. If we only play a handful of stocks at a time, you must be looking at earnings and news. No, Mikey, that's not it at all. All right, Jen, I'm still trying to figure it out. Mine didn't update yet. Oh. All right, we can take a look at that in a little bit. But anyway, the question is, Jim, you're looking at what's called dividend capturing. It's one of the oldest strategies there are, where you buy the stock before the dividend is paid out, collect the dividend, and jump back out with a profit. Yeah, that is doable. Yeah, but you got to do it the right way. Okay, there's a lot of ifs, ands, and buts about it. Okay, so I'm seeing right here this big, huge drop on Thursday. Okay, we had some retracement on Friday. I think there's going to be more tracement. I heard if we. All right, Jim. I don't know what that means. I heard if we. I was suspecting there's going to be some jump up on Monday. We'll take a look at it. But let's take a look at the numbers. Okay, right now, 222.45, the 222.50s are going for 278. So that's over 1%. And I like American Express. Okay. 222.50 right now it's at 220.45. Okay, so 278, what is that? That comes to 278 divided by the purchase price, 222.50, gives me a grand total of 1.2%. On AXP, the April 19 expires 240% of the April 12 expiry. All right, Secretariat, I'm not quite sure what you mean there. On American Express, the April 19, okay, is 240%. 240% of the April 12. Interesting. That is interesting. Okay, 6.7 divide 222.45. That's 1.5%. Hey, Ross, how you doing? But it's a crazy idea. It could be. All right, Secretariat, what we're looking at, you're looking at 3%. Okay, 3%, it's still 1.5% per week. So if we did this week's at 278, divide 222.45, okay, you get 1.24. So that's 1.25. Okay, you go 2 weeks out, you're getting 1.5 per week. So that's an interesting question. All right, so I like American Express, so I'm going to write it down. AXP and circle it. All right, next on the list is MasterCard, MA. 477. And that's a no right off the top. Okay, 477. The 477 is going for $4. Not even 1%. Now, I did not see AMD on Warren Buffett's list, updated list. Okay. Can you explain hammers and shooting stars? Oh, yeah. Hammers you get at the hardware store, shooting stars you see up at the sky. Really don't know what you're talking about, but as far as I know, hammers you get at the hardware store, shooting stars you look up in the sky, you see a shooting star every once in a while. That's the best I can give you. Visa, 277. It's not quite there. Candlesticks. Oh, you didn't say that. I thought it was, but I did a quick Google. I didn't see it. Okay. So candlesticks. Let's zoom into a candlestick. All right. That zoomed in enough for you? A candlestick. Basically, you see the little square, how it's hollow, and this one's solid. That's solid red, and this is like, light green. Light green acts like a balloon that goes up. Okay, filled in, looks like lead, and it falls down. All right. Anyway, green represents up day, red represents down day. Okay, so the vertical line, okay, you have one at the top, one at the bottom. The very top of the vertical line is the high of the day. The very bottom of the vertical line is the low of the day. Now, on an up day, a green day, the bottom horizontal line is the opening price of the day. The top horizontal line is the closing price of the day. Okay? Red is the exact opposite. Okay? The top of the wick, call it a candlestick, top of the wick is the high of the day. Bottom of the wick is the low of the day. Now, on the top horizontal line of a down day is the opening of the day. The bottom horizontal line is the closing of the day, down day. All right, so that being said, let's take a look at one other one, give you another idea. Okay, this is called a bar chart. Okay, you get 3 lines. You get a horizontal line on the left, a horizontal line on the right, and you get one vertical line. The vertical line, the top of the vertical line is the high of the day. The bottom of the vertical line is the low of the day. Okay? The green on the left side is the opening of the day. On the right side is the close of the day. See? Opening, it's a higher. Opening, higher. Same on the red. Opening, lower. Okay? I mean, can you explain the signals of a shooting star, candlestick, and hammer? Yeah, no. Okay, so this trading strategy was created for my 9-year-old daughter. Okay, you want to get into complex stuff like that, it just gets more complicated. Okay, I share this stuff for free. I don't want to get too involved in some things. Can you mirror image your screen? Yes, I can. But Julie, this screen here is being live broadcast on YouTube. Okay, if I reverse my screen here, hold on, I'll show you a second. Okay, see how it is now? Left to right, it looks normal to you. It looks normal to you, but it doesn't look normal to me. Okay, because I got one camera there, one camera there, one camera there. So I'm looking at these two are the exact same, those two over there, and this one's not the same. Okay, and it messes up with my mind, so I have all of them be the exact same. If you really want to see all this information here, just download, open up YouTube on your computer. You like that, Jim? All right. Sorry. See, this way it works for me. Makes it easier for me. The free value in these lives are appreciated. You're welcome, Jim. Okay, sorry about that, Julie. Yeah, Julie, if you really want to see this, really, come up to the bio over here. It'll take you to it'll be a little link there that goes to the 10-minute trader. Where is it? Okay, a 10-minute trader. That's the website, the 10-minute trader. Okay, a couple of videos there. That link right there is for the live trading. And right here, all these little things are links to all my social media. And you'll see this one right here is the YouTube channel that goes with my old videos. And this one right here is the live video that we're doing right now. Okay, so go over to the 10minutetrader.com, slide down YouTube Live. That's live right at this moment in time. Okay, that's what you're seeing here, live, this screen. Okay, so let's go back to where we were. All right, there we go. Okay, Julie, you're welcome. All right, let's go to the next one. Oh, we're on Visa. Yeah, Visa didn't work out quite right because at 277, it's not 1%. The smoking jacket is epic. Why, thank you kindly. I got 2 of them. This is just one. All right, next one. Mascot Visa. Apple. Somebody want to take a look at Apple? Now, just to let you know, I do have 4 different positions in Apple. I agree that I appreciate your insight, even though I don't agree with everything you say. All right, Mikey, I appreciate that. I don't ever expect people to agree with me. You shouldn't agree with me. You should, take what I say with a grain of salt. Do your own research. If I say Apple's good, take a look at it. If I say Apple's bad, take a look at it. What are your positions with Apple? I got 175s, 195s, and then the different dates. But 175s and 195s with Apple. All right, so we're looking at the next one, which is going to be Apple. Let's take a quick gander at that. AAPL. Covered calls? No. Calendar spread. Total different strategy. But I'm not going to get into that here because here is a simple trading strategy. Simple, easy, predictable, and easily duplicatable. Okay, so a year ago today with Apple, we got the bottom of the year, 159.69. Shoots up nicely. Okay, 197. Drops back down to 166. Shoots back up again to the high of the year, 199.88. And then drops back down to what mess that we are in now. Okay. The last 90 days. 90 days ago today, we opened up at 182.09. Can you check Verizon? All right, Jim, give me a second. I'll write that down. VZ. Okay, Verizon. We'll take a look at Verizon in a little bit. Opened up 90 days ago, 182.09. Topped out at, numbers look real good for Marvel this week with dividend. Okay, Secretariat. Well, let's write Marvel down. Hold on a second. MRVL. All right, Marvel's written down. We'll take a look at it. I have a feeling Apple is going to have a nice run up into earnings. Could very well be. Okay. Let's finish up taking a look at the numbers. Okay, we topped up with a double high at 196.38, drops down, and we got our 90-day bottom at 168.11. It looks like. Okay, the last 30 days, right there. 30 days ago, we opened up at 171.06. Okay, we got a bottom. It wasn't a 30-day bottom, but it dropped a little bit at 168.49, and then she shoots up to the 30-day high. Look at that. From this bottom here, it's not the 30-day bottom, because the 30-day bottom's over here. But she goes from this bottom here, shoots on up, hits at 178.69, comes down, rebounds, come down, rebound again, and Noel was sitting at 169.58. Okay? Now, like I said, I do have Apple in 3 different positions. Let's take a look at seasonality. What does Apple normally do this time of year? Okay, Apple this time of year usually just goes sideways. Look at that. Not a whole heck of a lot we can expect from Apple. The oscillators are oscillating on that one. Dude, they probably are. Standard. Okay, so this is where we are. So the 169, we're looking at the 170s. Okay, now I like Apple. I would not mind doing Apple at all, but Apple doesn't pay dividends. But why are we looking at Apple? We're looking at Apple because Warren Buffett owns Apple. Okay, he has Apple stock, so if it's good enough for Warren, I will take a look at it. So 169.55. The 170s are going for 180. That's over 1%. Okay, so I'm going to write Apple down. All right, Apple is officially written down. All right, next on the list, can you look at MPC? All right, it's written down. Apple's is done. ETV, Ed Television. What's the numbers screen? Oh, this number screen right here. This is the option chain. Okay. Okay. If you are approved for if you're not approved for options, that's what you're going to see. You're just going to see the last trade, the bid, the ask, the volume, the open, the high, the low. Okay, if you're not approved for options, that's all you're going to see. You actually have to apply to be approved for options. And if you are approved for options, this is what you'll see. Okay, this right here is 12 April 24th. That is this week coming up. That is week number 2 of the second quarter. Okay, so that's what we're looking at now. What opportunities do we have going into week number 2 of the second quarter? Okay, so we'll take a look at it and see what happens. All right, next on the list is Ed Television, ETV. ETV. I remember. Do you remember Ed Television with Matthew McConaughey? That was a funny movie. Ed TV. Okay, Ed TV is a no. No options available. So how can we take advantage of weekly cash flow if there's no weekly options? How would you use it? I'm assuming you're asking about the option chain. You're new here, all right? All right, I can tell you're new here because I'm good with names. Elway Steve P. Elway's Steve P. Elway Steve P. Okay, Elway. Yeah, you're new here. Just chill, relax. We're here until 11:30. It's another hour and a half. We invest in dividend stocks to get a safe, secure, predictable 1% per week using certain specific stocks and options. Okay, OAK is next on the list. Let's take a look at OAK. 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 Oak Tree Capital. That doesn't sound like it. Yeah, Verizon's on the list. Has no options, so that's a no. OZK. Ozark. OZK. Now, Ozark. There we go. 44 and the 45s. It's going to be a no. Okay. 44.89. The 45s are going for 20 cents. That's not even 0.5%. If I own a large number of shares of stock, is it risky to sell a covered call and puts? All right, Big Nate. It really depends on what you're doing because you're talking about two different things. Okay, you have stocks, options, you have the calls, which is one thing, and the puts, that's another. It really depends on what you want to do. Ultimately, I'm assuming you want to, wait a second. How far out are the Apple 195s? Hopefully December. Actually, my 195s are out into January. Okay, so they're out into January, so I got a long time to go. I'm hoping they come back into favor because right now they're worthless. That's part of that game. All right, so Ozark. Yeah, Ozark's not going to work because the numbers don't work. 44.89. The 45s are going for 20 cents. That's not even 0.5%, so that doesn't work. So Big Nate, as I was going to say, it really depends on what you want to do. Ozark. Oh, here's a good one. Pfizer. PFE. PFE. 26.66. Ooh. 19 cents. 27. That's going to be a tough one. Let's take out some math. Okay, we're going to do some math on this one because the 26.50s, we're losing 19 cents. So we can take the 44 cents, subtract the 19 cents from it, And is that going to be 20? Yep. No. Is that right? Oh, yeah, wait a second. Equals 25 cents. Okay, that's 9. We did this one last night. That's like 9.7%. Okay, are you willing to jump into Pfizer for 9.7%? Okay, it's not 1%, it's just a tiny bit below 1%. Okay, divide that 25 cents by the 26.50, 26.50, and it comes to 9.4%. That's 9.4, 0.94%. Okay, not quite 1%, but 0.94. And no, it's not circled. Okay, next on the list is BA. Isn't that Boeing? Hi, this is interesting. Mr. and Mrs. Gummy Monster. Ooh, you guys are new here. If you think this is interesting, chill. We look for a safe, secure, predictable, consistent 1% per week. Now, 1% per week is over 50% per year. That sounds interesting. I'm going to be here until 11:30. Sit, chill, grab some popcorn. DJ, I was just going to ask about Boeing. Boeing is next. BA. Boeing. There we go. 183. Okay. The 183s. Look at this. I can buy it on Monday. 183. The 185s are going 217. That is over 1%. Let's take a look at the numbers and see what it looks like. Now, Boeing had an issue. Okay, but Boeing also has contracts with the U.S. government. Boeing doesn't pay dividends. Oh, there you go. Don't pay dividends, so that's a no. So for you guys that are new here, the reason why we want dividend stocks, because absolute worst case scenario, if the stock goes down, we want to get higher and higher dividends consistently. So I only look at stocks that have 20 years or more of increased dividends. Now you may ask, how many stocks have more than 20 years of increased dividends? Well, almost about 200 of them. Huge government contracts, yeah. But here's the thing. I do angel investing, not market listed companies, but I like to dabble a little in open markets. Angel investing, why don't you DM me with your number? Because I'm looking for an angel investor in one of my other side projects. Solar electric pod drives for boats down in the Florida area, the Sunshine State. How can you go wrong there? Studies, though. Okay. Anyway. Boeing, interesting. I mean, you would make it over your 1%, but you have no backup plan. If the stock goes down, you're not getting dividends from it. So what are you going to do? I've got to do my test. Make sure I'm a real person. All right, there we go. Every once in a while, I got to slide that thing over to make sure I'm a real person. Okay, so Boeing, I like the setup. Look at the chart setup. Okay, we got a huge high here. They got some bad news. Okay, great. So now she dropped down. Now the 30-day bottom is here. We're higher than the 30-day bottom. We got 5 days to the downside. There's going to be a bottom there somewhere. That thing's going to turn around. Okay. All right. So that's Boeing ME. That's going to be a no. Yeah, it's a monthly. That's a no. Next on the list is Verizon. VZ. 42. Oh, 42 is going to be a no. Encourage more viewers. Okay, and yeah, you guys got to start sharing the lives. Like, hey, guys, come check this out because we're below 100. I don't like going below 100. Kind of makes me think, is it worth my while? It's a Saturday night, so I'm really not expecting a huge amount. Okay, but if we go below 60 viewers, I'm calling it a night. All right, DJ. So you get the dividends if you buy a call option. No, DJ, that's not what I said. Okay, you don't get a dividend unless you own the stock. Now, the reason why we look at dividend stocks is worst case scenario, because stocks only do two things. They go up, they go down. Okay, if they're not going up, they're going down. If they're not going down, they're going up. Okay, so I like to jump in before the dividend is paid. Why? Well, because there's a stock run up before the dividend. And I want to collect that 1%. If I get that 1%, great. Thank you very much. I'll go on to the next one. Hi from Cincinnati. I'll go on to the next one. Okay, because I have 150 stocks that I look at. Each one rotates over and over and over again. 10-4, you got that, DJ? Okay, so worst case scenario, if and when the stocks go down, I'm not sitting there waiting for it to go up and not gaining anything. Okay, at least this way, if the stocks go down, I'm gaining an ever increasing dividend consistently. Bro, can you send me $20 Cash App, please? Sure, why not? If the numbers work, 1% or higher, correct. Is it preferred to buy deep in the money in case the stock goes down? It all depends on the numbers. Okay, so here's the thing. Now, I haven't said this tonight, so I'm going to go through it now. Call option trading is different than market investment trading. Correct, it is, but they kind of go hand in hand in this strategy. Now, for those of you new here, this strategy right here that I am teaching you for free out of the kindness of my heart was created for my 9-year-old daughter back in 2008. Okay, I had 5 criteria I needed to meet. It had to be simple because she was only 9 years old. It had to be safe. The income had to be predictable. The income had to be consistent, and there was no possible way she could lose. Very important. Okay, 5. Simple, safe, predictable, consistent, and no way to lose. That's what the 5 criteria I had to overcome. Okay, yes, Mario, we're going to take a look at Marvell in a little bit. So the 5 criteria was met by 5 trading rules. Rule number 1, never buy something you do not want to hold for a long period of time because you just might have to. Rule number 2, never sell at a loss. Rule number 3, it has to have 20 years or more of increased dividends for that safety factor. Rule number 4, weekly options is also a must. Rule number 5, the numbers have to work. Bro, are you going to cash at me? Sure I am. Why not? You asked nicely. Why wouldn't I? Oh, because I don't know you? That could be a good reason. All right, Verizon. Like I said, Verizon is going to be a no for me, only because the purchase price is $42.14. Okay, the 42 at this moment in time is only going for 30 cents. Okay, that's 0.75. That's like 0.75%. Now, don't get me wrong. 0.75% is what, 35% per year if you get 0.75% every week. Okay, great. I don't mind 0.75%, but I like that 1%, and I have a nice list going for next week. Jacob McKay, Athena. Okay, no, look at Divi. Secretariat, I don't know what we're talking about. Athena. Okay, Jacob, I need to know the stock symbol, not just naming off Greek gods. Okay, we're looking at Marvell next. MRVL. Now, I like Marvell. I actually do have some Marvell at this moment. MRVL. All right, Marvell Technology, 72.80. All right, now, 72.80 is the purchase price for Monday. Okay, the last trade, 72.65. The bid, 72.65. The ask, 72.80. At 72.80, I can sell off the 73s and collect 213. Okay, and look at the chart. The chart really doesn't look that bad. Okay, 72.80. Sell off to 73. Are you going to cash at me when you get offline? Sure, why not? So let's do this for a second. Okay. Let's do the numbers, okay? Because I can buy it on Monday morning at 72.80. So at 72.80, I do the 73. See the number right here for 73? That's $2.41 per share. Are you making any cash on these trades? Yeah, Sarah, I make over 1% per week. Okay, 1% per week on average. Sarah, if you're up for a little bit of research, here we are, the 10-Minute Trader, which is my website. Okay, if you go up here to the bio, click on my face right there, get a quick little click, go to the10minutetrader.com. You'll come down at the very bottom. These are all the trades I made this year. Okay, week number 1, 2.1%, week number 2, 1.2, week number 3, 0.85, week number 4, 0.9, week number 5, 1.06, 1.03, 1.9, 2.0, 2.3, 4.6, 3.9, 0.9, 1.2, 1.5, so on and so forth. I average well over 1% every single week, which comes to over 50% per year. How much does someone need to get started? Well, or the Yankees. I have no idea what that's. I'm going to go back here for a little bit. I thought I bought and sold Marvel for 4% profit within a couple of days. Oh, Mario, that's awesome. Do I like the Red Sox? I haven't seen the Red Sox play since 1974. We got asses kicked by Raleigh Fingers. All right, interesting. All right, let's go back to where we are. ENA. Bought JD at 27.80 last week. Currently trading at 26. Strike. I should go next week. Just hang chill. We'll put JD on the list. Ooh, thoughts on Clorox? JD in. Oops. JD and CLX. All right, we'll take a look at those two in a minute. No, we'll go from there. All right. Oh, so as I was saying, yeah, these are my trades for this year so far. Okay, if you have any questions or you're debating whether or not it works, each one you click on it and it tells you what I bought: NYCB, JWN, F, Para, ALB, and KSS, which is Kohl's, Albemarle, Paramount, Nordstrom's, Ford, and New York City Community Bank. Okay, that's just that week. Okay, a couple of weeks ago, 3M, Macy's, KeyBank, Emerson. Before that, we were at Ford, Lowe's, Clorox, General Motors, Ford, Macy's, blah, blah, blah. All my trades are right there. Okay? So if you have any questions, do a little bit of research. They're there right there. The10minutetrader.com. Okay? Let's go back to where we were. What were we doing? We're looking at Marvel. What are you getting ready to pull the trigger on within the next 2-3 weeks? Well, Mario, that's what we're going over right now. How much money does somebody need to have to start out? My grandson started out with $50. Different strategy, but same concept. If you're really interested, DM me your number. I'll give you a buzz. We'll chat. Okay, so Marvel Technologies. Let's take a look at the numbers. A year ago today, with $38.99. Bottom of the year was the end of April, and that was $36.17. Now, the last 90 days, right? Last 90 days was the 90-day bottom, and that was $59.95. Jumps up, goes sideways for a little bit, shoots up to the high of. Let's make some money. All right, Mario, let's see what we can do. The high of the 90-day period was the 7th of March. Okay, so March 7th was the high, 85.76. So the last 30 days, okay, 30 days ago today, we opened up at 81.64. Very next day was the high of the 30-day period. About a week later, we have the 30-day bottom here on the 19th. So we go from the high of the 30 days to the bottom of the 30 days. And then we escalate to where we are now. All right? We go one day, gap up, pull back, gap up, sideways. We're sitting here right now in this section right here. All right, so let's zoom into that and see what it looks like. All right, so you got a high here. Okay, that was Thursday, Wednesday, Thursday, Friday. Okay, I would like to see one more day to the upside before I jump into this one. Now, if I jumped into Marvel, look what we're looking at. 72.80. That's what I can buy for first thing in the morning. The last trade was 72.65. Okay, Monday morning, 72.80. I could sell off the 73s and get 230. Let's see what that looks like. Clear. $2.30 divided by the purchase price of $72.80, and that gives me a grand total of 3.1%. All right, I might just go with the 72. I want to see what the 72 looks like. Hey, Mara Hope Consulting. Good afternoon, or should I say good evening? All right, so the 73 is going to give me 3.1%. Plus, if it goes up, I get an additional 20 cents if the stock moves up. So it's 20 cents plus the 230. Ooh, that's nice. That's like 3.5%. All right. I'm actually going to write Marvel down and circle it. And if any of you guys have been following me for a while, you know what that means. MRVL. And that's circled. Okay, gotta love it. I'm going to take a look at the 72 and the 71 to see what those numbers look like, because the further in I go, okay, see, at the money right now, 72.80, at the money is 73. That's going to give me 3%. What's the 72? Now, 72 is in the money. All right, so to hit the 73, the stock has to move up 20 cents. At the 72, the stock doesn't have to do anything. Okay, right now, if it stays exactly where it is, I'm still going to make my money, be back into cash the next week. That's what I love. I want to even take a look at the 71, see what that one looks like. All right, so let's check this out. Okay, Marvel at 73 is 3.15%. Okay, this is what I mean by going through the numbers. Now I want to take a look at the 72. The 72 is going for 279. But here's the thing. Check ENA. ENA. All right, guys, we're still below 100. We got to get more people here. I mean, this is just silly. At the 72.80, if I sell the 72s, I'm losing 80 cents right off the top. So I got to subtract that 80 cents off of the premium. Okay, so the premium is 279. Now I'm going to subtract the 80 cents right off of that. Okay, that's 199. Okay, now divide that by the purchase price. Divide that by 72.8, and that give me a grand total of 2.7. I would feel safer going further in the money. So at 72, I'm getting 2.7. 2.73. Okay, let's check out the 71. The further I go in, the safer I'm going to feel. Really. Okay, clear this. The 71 is going for 330. So 330. Now I'm going to subtract $1.80. Subtract $1.80 now. It's going to be that, and I'm going to divide that by 72.80, and that's going to equal 2%. So at 71, I'm getting 2%, 2.06. The 70s don't look that appetizing, but let's take a quick gander at the 70s. Clear. The 70s are going for 395. 395. I'm losing 280 right off the top. Subtract 280, and that gives me a grand total of 115. Divide that by the purchase price, 72.80, and that gives me 1.57. 1.57. All right. I like the 71s personally. Between the 70 and the 71. All right, so I'm actually writing Marvel down, circling it, and I'm circling the 70, 71s, depending on when she opens up at Monday. But that's how you check the numbers, see if it works. Okay, what am I getting as a profit? What's it costing me to get into the trade? Okay, the profit is right over here. Well, the bid, what I can sell them for. So if I'm buying it at 72.80, I can sell it for 70, 71, 72, 73, 74, 75. I can sell for any one of these strike prices between Monday morning and Friday afternoon. But what am I going to take for it? All right, me. Kobe cheated on his wife. What's your take? I don't really get into those kind of conversations. Really, I don't. Okay? I'm so old school, you don't want to hear what I have to say. I most of the time offend people. I need stocks that have been stable for the last 30 days with upcoming earnings in 3 weeks. All right, Mario, I really don't know what to say to tell you that, because you're looking for the last stable for the last 30 days with upcoming earnings in the next 3 weeks. Well, there's a lot of companies having the earnings coming up in the next 3 weeks. Okay, but I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. I don't like using earnings as a precursor when to jump in. okay, because they're not very predictable. They're not consistent. Dividends are consistent. If you take a look at the stock price 2 weeks before the EX date, before the dividends paid out, you'll notice stocks have a tendency to go up. Yay! P. Everly, nice to see you back again. It's been a while since I've seen you. I didn't see you here last night or the night before. Okay, so that's Marvel. I like Marvel. MPC is next on the list. MPC. Marathon. 219. All right, I'm going to say no to Marathon. I like the numbers. Broker, AUSA. Sorry, I meant divs. Okay. I held Ford almost 2 years, missed opportunity to sell at 20 a share because I believed it was. Okay, Hellraiser. I'm going to give you advice that I tell everyone else. Okay, there are two different ways of looking at it. Number one, it ain't a profit until you take it. That's number one. Number two, nobody ever went broke taking profits. Okay, nobody ever went broke taking profits. Yeah, you got all the dividends, fine. I mean, there's nothing wrong with that. I don't ever tell people what they should and shouldn't do. I bought Ford at $1 and sold it at $7. Way to go, Al. I know that. Is there a price stock cap you do not exceed? $300. Following. Oh, I don't want to pay taxes on it. You're asking the wrong question then. That's like going to a Rolls Royce dealer and ask what kind of gas mileage it gets. Okay, you earn more money. Hold on. Great to see you tonight, James. You're the best man. Well, I thank you for that. Actually, believe it or not, I've never been anyone's best man. Never. What broker do you use in US? I use Thinkorswim. But that was all the car companies were going down. Okay. It was a gamble. Yep, it was. I remember that when all the stocks, the option premiums were higher than the stock prices. That was crazy. Okay, so I'm going to pass on this one. Okay. I'm going to agree with Winner 86. All right. If you're worried about paying taxes, you really need to talk to a tax strategist. Okay. There's a reason why Warren Buffett pays less taxes than his secretary. There's a reason why Trump doesn't pay any taxes. There's a reason why a Nike dude made a couple of $1 billion and he doesn't pay taxes either. Will Altria have to cut the dividend? That I don't know. Just jumped it for 250 too soon. Okay. Oh, just dumped it. I have no idea what to tell you about that one. What is your favorite cocktail? Ooh, I like a chocolate martini made with chocolate ice cream and chocolate syrup. Oh, it's yummy. Seeing what you think on ENA. ENA. We'll take a look at it. Right now, we're looking at MPC. I'm going to say no to MPC, and here's the reason. Check the chart. Okay, back in January, she's around the 148. Look where she is now. That's a $50 increase. Okay, on a 148, $50 increase, that's a 30% increase in what, 3 months, 2 months? 30% increase in 2 months. And if you think there's not going to be profit taking soon, yeah, no. I am Pakistan, brother, big fan. Yay! Is M on your list for next week also? Julie, let's write it down. That's our economy. Yes, it is. And I love our economy. Okay, I look at 150 different stocks and I look very closely for the best opportunity for me. Okay, now I'm sharing this for, because kindness of my heart. Okay, whether you guys approve or not, that's up to you. But always do your own research. Look at the numbers. Do they make sense? It was supposed to have a deal with Stellantis, and my Stellantis has doubled. I held on to that. Okay, Hellraiser, that's great. Okay, now my assumption, by the way these conversations are going, you are not retired yet. Okay, I'm retired. I want a safe, predictable, consistent income. I do not want to have to rely on the stock moving up in order to get my income. Hey, nope, I have no idea what that means. Okay, so you're not retired, so you have the opportunity to be working, creating income. DJ, no, only if you actually purchased the stock the day before the X date. Yeah. You said retired. Yeah, so you're not retired. Fine, nothing wrong with that. I am retired. So this trading strategy was created for my 9-year-old daughter to make sure that it was safe, predictable, and consistent, where she could never lose and she could make a nice amount per week. Okay, she averaged when she was 9 about 5% per month. Now, if you think about it, 5% per month for a 9-year-old, it had to be simple, it had to be safe, predictable, consistent, no way she could lose. So the 5 rules implied. Okay, never buy something you do not want to hold long term. Okay, never sell at a loss. Make sure there's 20 years of increased dividends, weekly options, and make sure the numbers work. Okay, here with Marathon, even though the numbers are okay, look at the chart. The chart does not look okay. 2 years to me is a long time. Yeah, well, the longest I've ever held anything was 9 months. Do you typically execute your transactions when they hit a certain price automatically or live? I do it live on Monday. All my positions are filled on Monday. I like to get out by Friday. Soy Angel, where is the break-even point in the trade? Thanks for all your information. You're welcome. Marathon no bueno. I agree with you. Marathon no bueno. My break-even point. Oh, that comes down to the numbers. What I bought it at, what I'm selling at, what I'm bringing in, what I'm losing. That's all about the numbers. Okay, that is something we usually discuss on a Friday. Don't buy something you don't want to hold long term, but you just said you typically buy and sell the same week. Okay, now I'm going to address this a little bit more. Matt, when I say don't ever buy something you do not want to hold long term, what I mean by that is worst case scenario if the stock goes down, because stocks only do 2 things, they go up or they go down. So if I buy it and it goes down, I'm not going to sell it at a loss. That's rule number 2. Never sell at a loss. Number 1, never buy something you don't want to hold long term. What that means is I want to buy it and I want to get out of it on Friday. That's ideal. But if that doesn't happen, I have to be okay with holding it for a long period of time. Right? I'm not going to buy Joe's Pizza because it looks good and I think I can make a quick buck on it. Yeah, I make a quick buck, but what happens if I don't? If I don't, I want to make sure they have dividends and dividends that are increasing. Also, I want to be comfortable holding on to it. Okay, Marathon, I have no problem holding on to it. Ford, General Motors, no problem whatsoever. Wells Fargo, no problem. Bank of America, no problem. Certain companies I have a big problem holding on to because they don't pay dividends. And the dividends are not consistently increasing. So when I say don't ever buy something you do not want to hold long term, okay, make sure you're okay with buying it. Okay, in my rule, the way I look at it is they have to have 20 years of income, 20 years of increased dividends. Because if the stock goes down, I want to be reassured that I get higher and higher dividends every year. Hey, over there on Instagram, nice to show up. Thank you for coming by, Jake. So that's what I mean. Okay, don't buy something you do not want to hold long term. Doesn't mean I want to hold it long term. If for a 2-letter word, it's awfully big. If I have to hold it, I want to be comfortable holding it. I don't want to hold it, but if I have to. It wasn't a loss, but I missed the increase. I broke a little over even. All right, Hellraiser. Okay, I get that. I understand that. Now, also, anytime you buy something, you should always have your exit strategy in place before you buy. Okay, so you're going to buy Marathon at 219. Great. Before you decide to buy it, what's your exit target? Okay, you want to jump out at 350? You want to jump out at 220? You want to jump out at 225? Do you want to sell the option, collect the premium, break out just a little bit over? You really should, my humble opinion, I could be wrong, really should have your exit strategy, at least 2 exit strategies. You like that too? You should have at least 2 or 3 exit strategies before you even jump in. What's my ideal profit? What's my ideal time frame? What's my acceptable loss? Okay, these questions you should ask before you buy anything, because you don't know what tomorrow brings. Let's go see some more questions. Whoops. Why do you sell a call and not a put? Keep it simple. Well, keep it simple. Why do I sell a call and not a put? Well, if I'm selling a put, that means I'm forcing someone to buy it from me at a certain price. Okay, buying a put and selling a put, two different things, and it can get confusing, especially for a 9-year-old. Now, when I say I created this strategy for a 9-year-old, I think you missed the part where it said it had to be simple. Okay, so explaining to my 9-year-old daughter, okay, that you buy a stock, you sell somebody the right to buy it from you for the exact same amount you paid for it. Okay, so if I buy it at 219, at 223, and I sell it to someone at 223, and I collect $2, okay, that is simple to understand. Okay, but once you throw the puts in there, it loses its simplicity. Okay, it had to be simple, and it had to be safe, predictable, consistent, all that kind of nice, neat stuff, fun stuff. But number one, it had to be simple. Okay, once you throw in the puts along with the calls, then you have to think about what's the difference between the two. Now, if I buy a call, or if I sell a call, if I buy a put, if I sell a put, that's 4 different things that could happen. Okay, 4. Okay, sell a call, you're forcing, you're giving someone the opportunity to buy it from you at a certain price. When you buy a call, you have the opportunity to buy it from someone else at a certain price by a certain date. Now, when you sell a put, totally opposite. It's forcing someone to buy it or cutting down your purchase price, or cutting down your purchase price a little bit. That gets confusing as hell. So if I told my daughter only one of those, selling a call, okay, you buy it for, $223. You sell somebody the right to buy it from you at $223. They're going to pay you what is called a premium. That is this right here. Okay, this one right here. Okay, this is what you buy it for, buy the stock, and this is what you sell the option for. Does that equal 1% or more? If yes, then you do it. If not, next. Because you have a list of stocks, okay? I gave my daughter a list of stocks. This week, we're looking at this 10. That's it. We're only looking at this 10. Better yet, go here, watch this. Okay, see all these stocks here? Kinder Morgan, Wells Fargo, Citibank, Intel, ADM, IBM, Starbucks, Siri, Visa, US Steel, Apple, ExxonMobil, Kroger, British Petroleum, Chevron, Emerson, Ford, 3M. You heard of all those companies. Okay, so this week here, these are the only ones we're looking at. Okay, Kinder Morgan, Wells Fargo, or Citibank. Which one works? Okay, that's just that one list. Okay, let's go to another list. Here's another list. Okay, Emerson, 3M, PPG, Johnson & Johnson, Target, Pepsi. Okay, another week we're looking at those. It had to be simple for a 9-year-old to understand it and comprehend it. That's it. It had to be simple. Okay, it had to be safe. The income had to be predictable and consistent, and the numbers had to work. That's it. It's really, don't make it more complicated. Once you put the puts in there and the selling and the buying of the calls, yeah, it gets confusing. It does, especially for a 9-year-old. Fight Club, bro. Yep. We're dealing with the cream of the crop stocks. Yep. Well, you heard me. Emerson, Target, Pepsi, Johnson & Johnson, Coca-Cola, Colgate, Palmolive, Clorox, Home Depot, Lowe's. You heard of them all. Austin, how's it going, Austin? All right, sorry, I'm getting a little slow with these. Hold on. Hold on Bank of America too. I was selling at the price. It's approximately 36, I think. Okay, let's take a look at Bank of America. BOA. BOA. Wait a minute. That's not Bank of America. BAC is Bank of America. BAC. Yeah. 37. 37 is going for 55 cents. Why not? How do you feel about pipelines and MLPs? All right, SIMZ. I don't really look at it that way. What I basically look at is I'm having confidence in the CEO, the CFO, the board members, and how they run the company. How they run the company is directly related to the stability of the stock price, okay, the increase in the consistency of the increase of the dividend payments to the shareholders. That's what I look for. I really don't care if they drill for oil. I don't care if they make aspirins. I don't care if they gasoline and they make skirts or whatever. As long as they're running a good, successful business and increasing the dividends for more than 20 consecutive years, 20 consecutive years of higher dividends, I really don't care. Okay, I want to see higher dividends consistently. I want to see weekly options, and I want to see at least a 1% return on a weekly basis. That's my criteria. All right, come on. Where are we going? Where are we going? Uh-oh. ETTPA, SNAT. All right, well, my target was originally 40, and I have an order in, but what's your thoughts? To wait 3 more, whatever. Bueno, ¿qué pasa, amigo? ¿Cómo está? All right, so Bank of America. Let's take a look at the numbers because these numbers here work out nicely. Let's take a look at the chart. Bank of America a year ago, 27.74. The bottom, 24.99. That was in late October. The high of the year, 38.29. That was last week. Oh, I don't have my drink handy. I hate when that happens. Nope, no drink handy. All right, so last 90 days. $90 days ago today, we opened up at 34.30. Bottomed out on the 17th of January at 31.24. Again, topped out, same top. All right, 30 days ago. Look at the 30 day. Looks much better. 30 days ago, we opened up at 35.65. That is the bottom. The bottom was 35.07 30 days ago. 30-day tops right here. You got pullback, 1 day to the upside. I'm looking for one more day to the upside. I'm going to actually write Bank of America down. BAC. And I circled that bad boy. That's what I paid for it in October. Well, if you don't take your profit, why care about dividends? All they do is force a distribution of equity net worth, no economic advantage. Oh, Matt. Now, you've been here a couple times, Matt, because I recognize the name. Okay? Yes, as a matter of fact, Mario, Bank of America is one of my stable stocks. Okay, so we're going to talk about dividends, Matt. You ready? A dividend is nothing more than the profits that are given back to the investor by the company. If the company's profitable, they give back some of the profits. Why do I want dividend? Well, if the stock goes down, what am I getting? Okay, if the stock goes down, what am I getting from my dollar? Nothing. Okay, if the stock goes down from whatever, because number one rule, don't buy something you don't want to hold long term. I like Bank of America, no problem whatsoever buying it. Okay, if I buy it at 37.11, which is what it's at now, and what if it drops down to 35? I'm not going to sell it at a loss. So what do I get out of it? Without dividends, what do I get out of it? No, FINRA adjusts price and the EX extract the amount of the stock price. Yeah, that's correct. But you didn't answer my question. My question is pretty simple. If I buy it at 37.11 come Monday morning, because that's the last price, what do I get if the stock goes down, if there was no dividend? I'm still traumatized from the bank bailouts. All right, Mario, I can't help you out with that one. He's profiting from the call premium to make the 1%, not the dividend. Thank you, Winner 86. I was kind of hoping Matt would tell me what I'm going to make. But it protects the period you hold it for if the stock drops. Okay, thanks, Hellraiser. Still, Mr. Matt Johnson hasn't answered the question. If the stock drops and it doesn't have a dividend, what do I get for my investment? I'm waiting. Long-term sells away winners and hold loser stocks. That did not answer the question. If I buy Bank of America at 37.11 and it drops down to 35 and doesn't come back above 35, what am I getting if it doesn't pay dividends? What would be the reason for me to jump into a stock that does not share its profits with me? Okay, Mr. and Mrs. Gummy, that, I appreciate your input, but that still didn't answer the question. It depends on how you use it. If I buy Bank of America at 37.11 and the stock drops at 35 and never goes above 35, what am I getting for my investment? Now, I understand how you use it. I can use it for collateral for a loan. I can use it for whatever. What are you asking? How I arrived? I only arrived shortly. Okay. Lone Star, you get zilch. Thanks, Lone Wolf. You're right. Increased dividends. Okay, that wasn't what we're talking about. The stock will appreciate its stock value. Wait. Let me go back. What did he say? When there is no distribution. All right, Matt Johnson. I hear what you said. Really, I honestly heard what you said. But you didn't hear what I said. If I buy Bank of America Monday morning at the current price, 37.11, okay, and the stock never, ever goes above 37 ever again, what do I get for my investment? Okay, let's say hypothetically they put all the money back into, they take all the profit, put it back into the company, pile on, but the stock price never goes over 37.11 again, ever. What am I getting? Not answering. Okay. Wade, you can answer that one. Yeah, John Doe. All depends on how low you bought it. Okay, you guys just aren't listening to the question. The question's really not that difficult. Okay, I am trying to answer. I just need more details. Okay, the question is, okay, here's the question. Let's see if I can rephrase it again because I think it was pretty simple. At this moment in time, at this current moment in time, Bank of America is at 37.12. Okay, if I buy it at 37.11, yeah, I appreciate that. You're right. I need to know the price point purchased and the quantity you purchased. Premium football, blah, 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 blah. Okay, so here's the question yet again, because people are having a difficult time with it. If I buy 10,000 shares of Bank of America first thing Monday morning at the price of 37.11, okay, 1,000 shares at 37.11 Monday morning, okay, and for the next 10 years it never goes up in price, never goes up in price, it stays at 37.11 for eternity. What am I getting if they do not have dividends? Okay, Hellraiser, you're missing the point. All right. Now, Mr. Johnson, which is not answering conveniently, said, what's the point of dividends? Well, the point of dividends is sharing profits. Mario, you're right. You're absolutely right, Mario. Still making money. No, we wouldn't be making money. Fantasy football, correct. You're getting income. Hellraiser, no, you're not. Because the question was, if Bank of America didn't pay dividends, did not pay dividends, and I bought it at 37.11 and it never went up again, what income am I getting from that stock? Okay, now I'm getting a whole bunch of different answers, but there's really only one answer. Okay, if I buy it at 37.11 and it never ever goes above 37.11 ever again, and they don't pay out dividends, I'm getting jack diddly nothing. James, do you avoid having a stock in the weekly EXA? No, not necessarily. We started talking about dividends. You're jumping around. No, I'm not. I'm just answering someone else's question. Nothing. Thank you. Why is Ford 13 GWN? I couldn't tell you that one. A loss, correct. You get zilled, correct. Those are the right answers. Okay, so why do I look at only dividend stocks? The reason why I only look at dividend stocks is because if I buy something and it never goes up, I want to be reassured that I'm getting something. The stock price only drops essentially the amount. Let's go back for a second. The amount of the dividend. You're robbing Peter to pay Paul. Okay, Matt, Daddy, you're not really paying attention, but that's okay. Johnson, you're comparing a stock that is profitable to a company that's breaking even. No, Matt, you said something that said basically, why are you investing in dividend stocks? And I said, well, what happens if the company doesn't pay dividends? Okay, you couldn't answer that question. The question was pretty simple. The only reason I buy dividend stocks is to get a portion of the profits. There's two companies, ones that share profits and the other ones that do not share profits. Now, I'm at the point in my life where I want a portion of the profits because I don't want to have to go back to work. I make a safe 1% per week. Safe, secure, predictable, and consistent 1% per week from dividend stocks that have increased their dividends for a minimum of 20 years or more. That's the dividend kings, the dividend aristocrats, the dividend champions, the dividend challengers, and some of them that are on Warren Buffett's list. It's over 150 companies that have increased for more than 20 years consecutively, and they have weekly options. That allows me weekly cash flow. That's it. Now, when I asked the question, what do I get for a company that I buy if it doesn't pay dividends and it never goes up? You could not answer that question. That's the reason why I only buy companies that have increased dividends. Because if the stock doesn't go up, I want at least some type of income. Some type of income. Granted, it's not the greatest income in the world. I mean, what's Bank of America paying? 3%, 4% per year? Okay, fine. But without that dividend, and if the stock doesn't go up, okay, then I get nothing. That's why I only do dividend stocks. We already said no dividends, no price drop, you lose. Yeah, got that. That's smart. Thank you. Cap, blah, 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 whatever. How do you get the list? Well, there's a bunch of different ways. How does it work if the stock goes up as far as the person who bought the option at 37? I'll get that in a second. Hold on. All right. All right. So, David, I'm going to answer this question for David. All right. Hold on. I just paused the question. All right, David, how does how does it work if a stock goes up as far for, low disk space. It'll get low disk space. How does it work if a stock goes up as far as the person who bought the option to buy at 37? Excellent question. Here's my answer. Now, my purpose, my focus is a safe, secure, predictable 1%. 1%. I buy it at 37. I sell somebody the right to buy it from me at 37. I collect a premium. That premium for me to take into consideration, it's got to be 1% or more. That's all I want. If the stock goes to $40, $50, I really don't care. Honestly, I really don't. I say, good for you. You bought the option from me. Okay, I collected my 1%. I'm good. Anything after that, I'm good. So the person who bought the option, it is their opportunity to take advantage of it. So here's the two-way street. Okay, if the stock goes above 37 by Friday, because I buy on Monday, buy the stock Monday, sell the option on Monday. Now that option is good from Monday until 4 o'clock on Friday. At 4 o'clock on Friday, that person who bought it has to do, shit or get off the pot, one or the other. Buy the stock or let it expire. Okay, what he decides on Friday at 4 o'clock will be the deciding factor if I'm back into cash on Monday or if I'm bringing that stock into Monday. Okay, that's what happens on Friday. Okay, so me, I personally really don't care what happens to the stock. I'm not really here for capital appreciation. So if I buy it, the question was at 37.12, I sell somebody the right to buy it from me at 37. I collect a 1% or more premium. Okay, whoever bought that from me, they have the right to buy that stock anytime between when he paid for it and when it expires. Okay, if I do it on Monday morning, he has from Monday morning until Friday at 4 to decide whether or not he wants to buy it. Whoever it is, I really honestly, really honestly do not care. My concern is, does the stock have 20 years or more of increased dividends? Is the premium that I'm collecting more than 1%? And how does the chart look? Does the chart look like it's going to go up? Now, this one right here, your 30-day bottom over here, your 30-day top over here. You got 4 days to the downside, but Friday was a green day. Okay, I wouldn't just automatically jump in on Monday until I saw what it opened up at. If it opened up lower, I wouldn't do it because it's going down. But if it opened up higher, then I would jump in because I like Bank of America. They've been around for over 100 years. Okay, I have no problem believing that Bank of America is going to be here next year, the year after, the year after, the year after. Okay, and do I mind buying at 37? No, I don't mind at all. That's why I say never buy something unless you plan on holding it for a long period of time. Do I want to hold it long term? No, I don't. I want to buy it, collect the premium, get that 1%, and then let someone else buy it from me. Let them share in the profits. I want my 1%. If it goes up 38, 39, 40, great. You have your portion. I want my 1%. You take whatever's left over. I'm not greedy. I just want that 1% per week, consistently, predictably. Okay, every week, 1%. Now, I'll do Bank of America 4 times a year: first quarter, second quarter, third quarter, fourth quarter. If the numbers work like they're working right here, okay, the numbers are working right here. Oh, I don't know, are they? Okay, if the numbers are working, yeah, I'll do it. If they're not working, then I won't do it. Okay, it's all about the numbers. All right, hopefully I answered that question. No dividend stocks pay dividends monthly. You're correct. No, Blade, you're not correct. There are some dividend stock companies that do pay monthly. Okay, there's some that pay once a year. There's some that pay twice a year. There's some that pay 4 times a year, and there's some that pay every single month. Okay, so you just got to do the research and find out what stocks pay dividends every month. And there are a bunch of them out there. John Doe, let's go some more questions. Okay, if you buy 37 and don't pay dividends and it never goes up, you get nothing. You're absolutely correct. Forex Pro, that's smart. Yes, it is. I missed some of these questions. Wow, I missed a lot of these questions. All right. Sorry, I didn't get all these questions, guys. Sorry. You will lose the fees charged, blah, blah, blah. Yep, you're right. I want to do 1% in speed of light. Okay, Mario, you're in the wrong place. I only go for the 1% per week. All right, what do you use the calendar, charts, etc.? Well, the calendar tells me when the dividend's being paid out. Okay, so I got 150 stocks in my stable. Okay, I look at 150 because 150 meet my criteria. Okay, what happens next is when, let's go here. When are they paying their dividend? That's my concern. Why? Well, because I have found over the years of trading, I've been trading for about 20 years, that at the dividend date, before the dividend date, the stocks have a tendency to move up. Now, I created some software that tells me exactly how often it goes up within the 10-year period. Would you go for a Thursday sale instead? Not really. Okay, I like listening to you. It's cool to hear your investment principles. I had no idea this kind. Well, I'm just here to share the wealth of content was on TikTok. Yeah, it's opening up a lot of eyes. What we actually, because if you go to TikTok and you just scan out things that are interesting, there's some really interesting information out there. You know, and it's perfectly clear. Once you scanning through TikTok, it's perfectly clear why the powers that be don't want us talking to each other. There's some interesting stuff out there. So if he doesn't buy a stock, you stuck with it? Well, I don't look at it being stuck with it, David. I don't look at it being stuck with it because I don't buy the stock unless I want to hold it. Okay, because it's going to pay increasing dividends every year. So I'm not considering it being stuck. But I get what you're saying. Yeah, that's about right. BAC might be moving lower due to fines, penalties from the feds. Okay, let's take a look at BAC. Okay, it could be. You never know. But Bank of America has been in business for over 100 years. Okay, Bank of America has seen World War I, World War II, Korea, Vietnam, Afghanistan, Iraq, Iran, Desert Storm, all that crap. It's seen the what do you call it? The stock market crash. It's seen the Great Depression. It's seen the oil embargoes of the 70s, the dot-com bust of the 2000s, Y2K. It's seen the what do you call it? The financial crash in '08. It's seen the what do you call it? That jabby thing, the pandemic. Yet they continue to increase their dividends, and they've been in business for over 100 years. I'm not worried about Bank of America going out of business. Really, I'm not. And take a look at what is the book value of Bank of America as opposed to the stock price. I think it's $48. Right now, the stock price is 37. Okay. You got to be positive somehow. Thanks, Christian. Most people involve feelings. That's how they lose money. Okay, Christian, yep, that's probably true too. I don't think I could live off of 1%. I'm very greedy. Helicopters and picnics kind of thing. Yeah, well, you know what? It all depends. I live very comfortably off my 1% per week. Okay, that's per week. Okay, so if you got $1 million, 1% per week is $500,000 a year. Okay, if you got 10 million bucks, 1% per week is $5 million a year. If you got 100,000, that's 50,000 a year. Okay, so I get it. You know, you have so you need more money than I do. Nothing wrong with that. Okay, I was a crew chief when I was in the service. It's cool to ride around in helicopters, get you there a lot quicker. Okay, but there's a lot more going to it. All right. You got to follow the chart, take profits. Yep, they ain't a profit till you take it. ETFs. Yeah, I do look at some ETFs. I get monthly. All right, good for you. What is the best time to enter that 1% dividend stock? I like doing it on Monday mornings, as soon as the market opens. Now, you'll notice that I'm here every night, every night at 9 o'clock. Now, I consistently look at stocks. Okay, this is just this week. Okay. I got 4 or 5 of them over here circled for Monday's consideration. When Monday comes, I'll take a look at the numbers. If everything works out okay, then I'll do it. Okay, it's right next to the announcement date. Okay, 1% off your portfolio is a lot depending on how much you have. True, but think of it this way, Christian. Who else? What ETF? What funds give 30% or more, or 50% or more? Have you ever heard of a fund or a bank or a financial analyst giving 50% or more? No. Okay. So what's on for Monday, Mario? Wells Fargo is one for Monday. Who's that? Hellraiser? Hold on, we'll take a look at Wells Fargo. What do you sell? Record date, first thing in the morning. My boy Jewel, you were here before. I recognize the name. Now, Hellraiser, Wells Fargo. Yes, Wells Fargo is on the list for Monday. Mario, hey Marco. He's saying hi, someone else, not me. Okay, fine. All right, sent me a rose. Thank you very much for that. Oh, it's 11 o'clock. We got a half hour left to go. Do you list the stocks you trade anywhere? Yes, I do. Now, we have a trading group that meets every morning, Monday, Tuesday, Wednesday, Thursday, okay, from 9:15 till 10:15. I do a podcast. Now, I have done a podcast for the past 4 years. There's over 800 episodes. You can take a look. Take a look at every trade I've ever done. Where are they? Okay, back to the10minutetrader.com. Right there's my podcast. Click on the podcast. There it is. Dividend Stock Talk. You get it any podcast place there is. Okay, Hump Day again. It comes every week. What's happening to Kohl's and Nordstrom's? Kohl's, wait a minute, Comcast, Kohl's, and USB Verizon. Love them all. Okay, over 800 episodes right here. This is what I trade every morning. I will actually look at my stocks. I meant, what program do you use for the calendar charts? It's not a program. It's actually a trading platform called Thinkorswim, and that is available from Charles Schwab. Thanks, Jen. I really appreciate you and the other guys that answer some of these questions. It's one less thing I need to worry about. So Bank of America, I like it. The numbers work great. I would like to see one more update come Monday. before I would jump into it. MPC. VD. Who came up with VD? Oh, do you teach psychology? Oh, I like psychology. Vanguard ETF. That's going to be a no. Hey, Randall Ray, you're a little late. We're done in another half hour, Randall. All right, CLX, which is Clorox. CLX, another company over 100 years old. Dividend King. Now, if you guys don't know what Dividend King is, they've increased their dividends for more than 5 decades. That means every single year, higher and higher and higher dividends. One of the companies I love to look at all the time. And look at that, the 145s, the 146s. Ooh, check that out. Jen, are you seeing these numbers, Jen? Check a look at this. The 145.92, the 146 is going for 155. That's over 1%. Let's take a look at the chart, see if Clorox is up for Monday. Clorox is a stable stock also, yes. All right, so let's take a look at the chart, see what it looks like. A year ago today, Clorox was at 158.12. Top of the year was 178.20. Okay, that was back in the beginning of May of last year. From there, we dropped down to the bottom at the beginning of November. All right, the last 90 days. Okay, 90 days ago today, we opened up at 141. Okay, the bottom for the 90-day period was January 24th, way over here. Then she gaps up. Look at this gap up. I love gap ups. I do. But the gap did fill eventually over here. Okay, so gaps have a tendency to fill. All right, so 30-day bottom was on the 24th of January. 30-day top was 158.89. I like that, Mario. Eggs, bread, milk, stocks. What happens when you buy, price becomes significantly lower than the market price? Longer date CC. All right, shirt is Beth House ready. All right, I don't get that one, 10 minutes. All right, Julie, what happens when you buy, price becomes significantly lower than the market? All right, interesting question. Julie, I'm going to refer you back to rule number 1 and rule number 2. Okay, number 1, never buy something you do not want to hold long term. Basically, what does that mean? Do your research. Do you know the company? You know who Clorox is, so you don't really have to ask yourself, what do they make? You know who Clorox is. They've been in business for over 100 years. They've increased their dividends for more than 50 consecutive years. Every year, higher and higher and higher dividends. Okay, you know who they are. You know what they make, household name. And do whatever other research makes you feel good about buying it. And if you're uncomfortable with buying it, don't buy it. That's rule number 1. Never buy something you're not okay with holding for a long period of time. Rule number 1. Rule number 2, never sell at a loss. So if the stock goes down, you're getting higher and higher dividends. That's the reason for a good quality dividend stock that increases consistently. Never buy something that doesn't increase their dividends. Why? Because you might have to hold it longer than you want to. That's your consolation if the stock goes down. Also, if the stock goes down, you can always sell options that are a little out of the money. Okay, so let's say hypothetically, you buy Clorox at the high of the year, 158.93. Where's it right here? 158.93. Okay, rule number 2, never sell for a loss. So you're waiting for it to go to 158.94, 158.95, or anything above that. That's your profit. Okay, now she's slowly going down. Okay, back up. Didn't hit target price. Slowly going down. So here's your chance. Okay, so when it goes down from 158.90, whatever, and now it's down at 154. Now you have an opportunity to sell the 155s, the 156s, 157s, 158s, so on and so forth. What do I mean by that? Well, let's open this up a little bit. Okay, right now the stock price is at 145.92. That's what it's at right at this moment. So if I sell off the 145s, I can get 215. If I sell the 146s, which is one strike out of the money, I only get 155. 2 strikes out of the money, I only get 110. 3 strikes out of the money, I get 70. 4 strikes out of the money, I get 45. 5 strikes out of the money, I get 25. And then 6 strikes out of the money, I get 5 cents. What does that mean? Well, I'm going to give you the cow analogy. If I buy a cow, right, and every week it gives me a gallon of milk, okay, there's my 1%, a gallon of milk. Okay, what happens if it gives me a half a gallon of milk? Do I get rid of it? No, I take the half a gallon of milk. I said, okay, see what happens next week. What happens if it only gives you a quart of milk or a cup of milk? Do you get rid of it? No, you just wait and for it to get back up to where it's supposed to be. And then when you hit your target price, you jump on out. But always remember rule number 1 and rule number 2. Never buy something you do not want to hold long term. That shirt is Beth House ready. I have no idea what Beth House means. I told you I'm your hype man. Thank you, Mario. The 1% Investors Club. Cool beans. Julie, I could learn. I would like to learn more about selling calls. Okay. OTM. Yep, money calls. Yeah. Jalen, that was right. What about QCOM? We'll take a look at QCOM. Yes, but while you're holding, should I do covered calls for longer dates or at lower premiums? Ooh, awesome question, Julie. Okay, and here's my honest answer. Are you ready? It's all about the numbers. Okay, what you bought it for is never going to change. Okay, now, if you bought it at 150, that's never going to change. What is this week's 150 going for? Okay, is it good? Is it bad? Is it okay? What's next week's 150 going for? Is it good? Is it bad? Is it okay? What is next the week after that? So on and so forth. Go out as far as you need to go out in order to turn a profit. Okay? If you don't like that, sell a 148 or 147 or 146. Depends on how far it drops and how far away you are from being called out. Because if you buy it at 150, she drops down to 130, and you sell the 140s, okay? If she jumps up past 140, you're out of the money and you lose $10. Because remember, you bought it at 150. That's why I look every morning. Okay, every morning I buy everything on Monday. Okay, I don't buy a lot on Tuesday, Wednesday, and Thursday. Very rarely will I buy anything on Friday. And if I buy something on Friday, it's usually for the next week. Okay, I jump in on Monday morning. I do all my purchasing on Monday morning. Okay, I sell all my options on Monday morning, and then I wait for the clock to count down to Friday. I jump in at 3 o'clock on Friday. I check out what all the numbers look like, and I try to decide what happens to the positions on Friday. QCOM, we'll take a look at QCOM. Hold on a second. Okay, what if I think of Nicola? Nicola is a no because it has 20 years to get. Do you share what you buy on Mondays or wait until Friday? All right, Julie, as I was saying, we actually have a club. Okay, it's not really a club. We have a bunch of people that meet. We do a Zoom call. Okay, every morning I do a Zoom call where you actually, if you're a part of the group, you actually get to watch what I'm trading. After I'm done with my podcast, I answer all your questions. Okay, and if you want to buy something, that's totally up to you. I never tell people what to buy. I never tell people what to do. I just go through the numbers. I'll go through numbers just like I did right now. And if I like something, I say, oh, I'm going to buy this. And if I buy it, and if you choose to copy what I'm doing, that's totally up to you. Okay, if you choose to look at I don't know, Roadhouse Steaks. We'll take a look at Roadhouse Steaks. I'll give you my opinion. That's all I have to do. Give you my opinion. I'll read the charts. I'll read the numbers. And then you have to decide for yourself what is right for you. Okay? I have no problem going through the numbers and reading the chart because this never changes. Once these numbers and once these charts are up there, it doesn't change. You know, the high of the day is the high of the day. The low of the day is the low of the day. Never changes. How you interpret it to where do you think it's going to go next, that's where everything changes. But yeah, I do live trading. I have a live trading group. Okay, where was I? Everybody's risk is different. You're right, Mario. Some of us are at a chill out age and hedge. Yep, that's where I'm at. I'm at a chill out age. I don't do anything risky. Okay, love to hike. Hey, love to hike. Nice to see you here. Contract. If the contract gets filled, it's automatically done by the broker. Yep, that's correct. If you buy at 150 and it goes up to 155 on Friday, do you make the $5? Okay, well, here's the thing. Cool's cat. All right. If I buy it on Monday at 150, okay, if I do not sell a covered call against it, I would get the $5. But if I sell the 150 covered call against it and collect my 1%, whoever bought that option from me, who gave me the money, he or she gets to have that appreciation. Okay, I'm really not looking for appreciation. I'm looking for a safe, predictable, consistent 1% per week. That's all I'm looking for. So if I buy it at 150, I sell you the right to buy it from me at 150 between Monday and Friday, and it goes up to 155. That's your profit. That's your risk reward ratio. You're buying the option. You're buying the option. I'm collecting that. Okay, I'm collecting that fee. You're paying that fee. If the stock goes up to 155, that's yours. Okay, I'm only looking for the 1%. I'm willing to share the wealth. Okay, can you sell a stock before the option expires if the stock price goes up? Good question, David. Once you sell a covered call against your position, okay, I'll give you the same example. If I buy a stock at 150, okay, and I sell somebody the right to buy it from me at 150 and they pay me a premium, okay, and that premium is 1% or more, okay, I'm happy I get my 1% or more. If the stock goes up, okay, can I sell it? No, I cannot, because somebody paid for the right to buy it from me at 150 between Monday and the option's expiration on Friday. So if the stock goes up on Tuesday and Wednesday to 155, whoever bought that option, that's why they bought the option, because they anticipated going up. Me, I just want that safe 1%. Okay, and if I'm getting 1% per week, that's over 50% a year. I'm perfectly okay with that. Okay, and if you're looking for stock appreciation, you're at the wrong place, because I don't do stock appreciation because it's not consistent and it's not predictable. Okay, and I do not want to sit in front of my computer for a long period of time. So anytime you ever hear one of my videos, it's always the same. Good afternoon, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. The 10-Minute Trader basically means it takes less than 10 minutes a day to do this strategy. 10 minutes a day, you throw that together, that's not even an hour a week. Now, if I'm making 1% on an hour of effort per week, if you took a look at my accounts here, whoops, not that one, this one right here. This account right here, number one, has $117,000 in it. 117. What's 1% of $117,000? That's $1,100 a week for 1 hour's worth of work. I'm perfectly okay with that. All right. So 1% a week, however you want to figure it out. Okay, it's really not that difficult of a strategy. This was created for my 9-year-old daughter back in 2008. Okay, it was simple, safe, predictable, consistent, and there's no way she could lose. The 5 rules: never buy something you don't want to hold long term, never sell at a loss, make sure there's 20 years of increased dividends, weekly options, and the numbers got to work. 5 criteria of how it had to go, and the 5 rules to how to make that happen. To make a quick, for sure buck, or afford to take a bit of time to take a profit. Okay, Mario. Okay, whoops. Okay, Jose, if you get 1% a week and compound effect would be about 66% per year, I can live with that. Yeah, so can I. I don't get that much per year because I spend my money. Again, let's go back to this again. If you see very closely, okay, week number 14, that was last week. Look at this. Okay, I made 1.5%. I also withdrew $1,700. Okay, week number 12, I made 0.9%. I withdrew $1,500. Okay, week number 11, I made 3.9% and I took out $1,900. So I'm actually living or I'm actually extracting money off of this account on a weekly basis or bi-weekly basis. Because I'm living off of the money. Is your trading group available to participate in? Yes, it is, Bree. Again, go back to the 10minutetrader.com right here, the 10minutetrader.com. First two videos gives you basically what I'm doing right here. Okay, next video, same thing. Right here it says live trading, trading live online, right there. That is a hyperlink that goes to Dividend Stock Talk on Patreon. That's where you sign up to be part of the morning group. Let's go back to where we were. Okay, follow the link. How are taxes? All right, Cole's Cat. You need, if you're asking about taxes, I'm going to tell you, you need to talk to a tax strategist to help you not pay taxes if you do not want to pay taxes. Okay. Austin, the person who bought the option, not the broker. Rocco, do group members get secret whistle rings so group members can signal each other? As a matter of fact, we do. We have a secret handshake too. Is it trading a bad place to start for a first-time newbie? Now, Pulp Fiction. That was a good movie, by the way. I'm assuming you're doing a, what do you call it? A runoff of that movie. As a newbie, I would suggest you do paper trading first. Okay, what is paper trading? Paper trading is basically kind of like playing Monopoly with the stock market. Get good at it first before you put real money into it. It was a cool movie. And when I first saw the movie, I was really unhappy that John Travolta got killed like 5 minutes into the movie. Says, you got to be kidding me. How can John Travolta get killed 5 minutes into the movie? Anyway, that's how that goes. So Clorox is on the list for Monday. Or is it? Hold on a second. Okay. Yes, it is. As a matter of fact, QCOM, we're going to take a look at that in a minute. Look, Clorox, 16th. Monday is the 8th. 2 weeks before the EX date. And what is the Clorox? $1.20. Oh, I gotta like it. No, we still not do QCOM yet. CLX is on the list. All right, we got 3 more to do, and that's it for the night. Okay, just 3 more. How often do you go live? I go live every night at 9 p.m. From 9 p.m. to 11:30. That's 2.5 hours. That's plenty. Okay? If you're interested, I do a live show every morning for those paying customers. Yeah, Jen, as a matter of fact, is one of those customers. She's doing well. Ask her what she's doing. Jen's doing awesome. ENA. ENA. No option. Now, this is the last one of the evening. Thanks for what you do, Jan. All right, thank you. Pulp Fiction. What does the Pain Live provide your night vibes don't? Oh, we actually do live trades. Okay, now, what you're seeing here is basically what you guys throw at me. Okay, you guys throw this at me. All right, now, if I go back and show you some of the stuff you guys have been throwing at me, check this out. Hold on. Okay, this is today and yesterday. Okay, this is last week. Okay, the week before. Nope. The week before, going all the way back to January. Okay, so I'm on for 2.5 hours. All right, now you guys throw at me stocks all the time. Okay, so here's the facts. Out of every single stock you guys have thrown at me since January, 2.5 hours a night, only two have not been on my list. 2, that's it. So everything you named off to me tonight, no. No. Okay. So what happens on Monday? I mean, yeah, Monday we went in the live trading. I actually walk through the steps and I actually answer all the questions. Hold your hand as you make your trades. Explain things you don't understand. Walgreens, WBA, yeah. That we're not going to get to tonight. Marvel and Clorox, both on the list, yep. All right, last one for the evening is going to be QCOM. QCOM. There you have it, 171, the 172. Ooh, not bad. I'm a little bit leery about that, but let's take a look at the numbers. All right, James Forever. Interesting name. Okay, so QCOM. A year ago today, 122.45. Bottomed out end of May at 102.28. Went sideways for a bit in the last 90 days. 6 trades. Thoughts on recent job data. Doesn't really affect what I do. Sorry. 90 days ago today, we opened up at 136.99. A couple of days later, we have the 90-day bottom. 90-day bottom. Okay, that was 136.03. Okay, she goes up, comes down, goes up, comes down, goes up, comes down. Now here we come to the interesting part, the last 30 days. Okay, take a look at the last 30 days. Okay, goes up, pull back, gaps up, pulls back, gaps up. Look at where it is now. Okay, 30 days ago today we opened up at 164.82. 30-day high was 177.59. 30-day bottom was following week. Yep, reached a new high. Yep, I see that. On the 19th, and that was 163.63. Gaps up, gaps back down again. Like I say, gaps up, gaps back down, and goes up to not a 30-day high, but gets up there. Okay, so 30-day bottom on the 19th. We have a nice little high, not a 30-day high, but a high, okay, right there at 175.95. Pulls back Friday. Okay, I would like to see, personally, another update come Monday. Okay, another update come Monday, that would be my signal to jump in. Because I like 2 days to the upside after a high. After a pullback, I like to 2 days to the upside. What does it look like? Well, 171.53. But some of your week 14 positions are not on stocks with consistent dividend increases for 20 years. Why? Okay, Allison, I don't even know how you got a list of my week 14, unless you joined up under a different name. Okay. All right. So where was I? Oh, so 171.53. 171.53. So the closest one is going to be the 172.50. That is over 1%. So is the 170. Okay. So these both numbers here. I buy it at 171.53. I can sell the 172.5 and make over 1%. So I like QCOM. Okay, so I'm writing that one down also. When do they pay the dividend? That's an interesting one. QCOM. Oh, not in April. March. End of February. So that's going to be a while. Just got it, Hellraiser. Glad to share. Do we have a week 14? Isn't there only 13 weeks in a quarter? Yes, there are 13 weeks in a quarter. Isn't there on your page? I'm kind of curious, what page is that? I don't think I've listed them anywhere. Okay, so just in case for you guys trying to figure out where week number 14 is, you got to ask yourself a couple of questions. How many days are there in a year? 365. How many trading days in a year? 266. How many weeks in a year? 52. Okay. How many weeks in a quarter? 13. 26. No, Mario, there are 52 weeks in a year. Okay, 52 weeks in a year. We are in, at this moment, week number 14. Next week is week number 15. Yeah, at double time. That's a military thing. Okay? Yeah. Okay, next week is week number 15. Or week number 2 for the second quarter. Week 15 for the year, week 2 for the quarter. That make sense? Oh, we're at 11:30, and we're under 100 viewers. That's my cue to call it a day. Well, for you guys, we'll be here again tomorrow morning. I mean, not tomorrow morning, tomorrow night. Yeah, tomorrow night. All right, so what's the Julian fate today? I have no idea what Julian fate is, Mario. Good night, everyone. Great day, date. Oh, interesting, yeah. All right, thank you. Glad I came across you. All right, Pope Fiction. Hope to see you again tomorrow night. If you guys want, there's always plenty of room in our morning trading group. Hold on, trying to get you to 29,000. I appreciate that, but it is that time of day. My throat's getting a little hoarse. I don't have my drink handy. And I gotta pee in the baddest ways. All right, anyway, you guys have a great night, and I'll see you again tomorrow night. And now, price for the group. That's over on. You come up to the bio up here, go to the 10-minute trader, and then you follow to the live trade. You can see which level you want to participate in. Hellraiser, I'd like to see you again. You got some nice input. Okay, but talk to you another time.